Time now for markets, and the September WASDE report didn't offer up too many surprises, but could we be seeing further production cuts from the USDA in future reports? We'll talk about it. Plus, we got some updates in the ethanol market, and harvest is a good time to consider some new selling opportunities. Jeff Peterson, president of Heartland Farm Partners, joined me this week to talk about all that and a whole lot more, and we started with crop conditions around the state.
And what's really interesting is how quickly this crop changed. And a lot of that was because of our moisture situation that we had in August. But you're exactly right. As we come into this time of year, normally conditions are going to come down anyway, and they did that this last week anyway. We came down to 60%, which was down 1%. Compared to last year, it's hard to believe it was 55, so it was worse, but that was because we had different conditions. One thing, though, that we like to take a look at, though, is we like to take that index and we like to use all parts of it. So instead of just using the good to excellent, which is what we usually talk about, we like to break it apart and put a weighting on it. So what we'll do is there's a very poor portion, we'll rate 0. We'll then go ahead and take the poor and put it at 1, the fair at 2, the good at 3, and then the excellent at 4 and build an index.
All right, and here we are over a couple weeks into September. That new crop marketing year started on September 1st, so we've had a little more couple weeks now to watch things. What's been the big story?
Yeah, that's exactly what's fun to see this time of year, is that finally, before we even came into the 20 crop year, which started on September 1st, we started seeing some nice exports building up on both corn and soybeans. And to give you an idea, well, I think the best way to look at the export side is to look at what do we have on sales. Okay, what do we have sold, but what also is we shipped? And that's not as big a deal right now because we haven't shipped much yet. But 742 million bushels is what's already been sold. Give you a comparison, last year at this time it was 283 million bushels. Now what's even better though is the soybean side, and that's because China's been showing up. They've been buying a lot of beans. On the books already there's 1.1 billion bushels. That compares to last year at this time 347 million. So you can see we've got a nice book of beans on, and USDA, just to give you a reference point, has us for the 2020 crop year coming in at about 2.125 billion. We've got almost half of our book of beans on already.
All right, this is something we're going to be tracking for the weeks to come for sure. So take me through some of the major points that we saw in the September WASDE that was released not too long ago. Didn't see too many major surprises with it, but what's this about maybe traders expecting further production cuts from the USDA in future reports?
Yeah, that's a good point. And a couple things just to kind of remember is that, so the September report is kind of like what the August report used to be. So let me explain that. So NASS takes over in August, really come up with the yield portion. And the only difference though, starting last year, NASS didn't have anybody out in the field in August. There was no objective component to it. They still did their survey, but they didn't have an objective component. So then we get into September, we get the objective yield side, and really, layman's terms, what that means is they're out in the field. On the corn side, they're counting stalks, they're counting ears, and if the corn's in the dent stage, they're looking at the ear, they're measuring the length, counting the rows around, and then they're putting a set of calipers on it. Now, what we believe is going to happen, Troy, going forward, is that we think they're picking up some on the smaller kernels because we have the dry conditions and the hot conditions. We just don't think the test weight's quite there, so we don't think they're quite picking up all of that just by checking the calipers on the ear. Over on the soybean side, that's where it gets a little more interesting. So our pod count, though, what NASS found is they were out there doing those counts slightly below where it would have been in 2018. But we think there's a little bit of a problem, and here's the problem. I don't think, and it's not because they did anything wrong, I just don't think they picked up on the lighter pod weights yet. And so I think what we're going to find as we get further into it, now it might take the October, might even take the November report. I think as they actually weigh up those pods, I think we're going to find the pod weight come down, and as a result, we'll see that bean yield work its way down as we go forward in future reports.
So all that being said, any selling strategies you can offer up as we're getting into harvest?
Sure, yeah, great point. So if you're coming into harvest and you're a little behind on your sales, and which there's quite a few people are, because it was really hard to sell at below break-even level, starting on the beans first, I think as on the run we're on in here, we're going to want to make sales on the beans. For sure, you're going to want to watch these basis levels really close, because here's what we're finding, is we're going to find these basis levels, they're going to be what we call quick ship, meaning over the next couple days or the next week, they'll have a really good basis. Make sure to take advantage of those if you can get those bushels delivered. But if you can put the grain in the bin, corn and soybeans, I wouldn't do anything with basis after harvest. Coming back over on the corn side for harvest, on this same move we have in here, you're going to want to make sales on stuff that you're going to have to deliver at harvest time and get those bushels sold. But then I'd sit back and wait and see what we get post-harvest yet, because we haven't even talked much about South American weather yet, and that'll be something the market will pay more attention to once we get this crop put away, get the focus shift over onto what our ending stocks are, and then start talking about next year.
All right, hey, lots of great information today. Let's get a quick word about ethanol demand before we let you go. So there's been kind of a V-shaped recovery from what we've seen since everything that took place back in the spring, right?
Yeah, there really has been, and it's been coming up, and I think what everybody is trying to figure out right now is what's that new normal on miles?
Yeah.
Gasoline demand is running probably about 8 to 9% below kind of where we'd expect it to be for this time of year. So if we're putting a 10% blend in fuel and we've got less, we then step over and we say, well, what does that mean? Well, this last week, the implied ethanol demand was down about 11% compared to a year ago. So not too much different than what we're seeing on the gasoline side. But I think in the last report, in the September report, they lowered, they being the WASDE report, they lowered the demand basically for corn that was going to go into ethanol by 100 million bushels, brought it down to 5.1 billion. The current pace we're on, though, would suggest we're somewhere closer to 4.9. So if we're going to go ahead and hit that number, we either got to see the miles increase, which I don't think we will, then we have to see some additional demand come from the ethanol side out there across the world.